Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. We'll on to some more earnings then. JSPL Q1's earning beat Street estimates. The domestic steel business posted stellar numbers, while Oman business performance was also good. Nigel is here with the details. Nigel, good morning. Over to you.
Well, the numbers look good, actually. You know, interesting to see that chart on the screen. Someone appeared to be a little nervous ahead of those numbers. But in terms of results, these numbers look good. Stock reaction, I mean, the stock can do anything, but ideally it should open up in the green. It beat on all accounts. In terms of the top line, it beat our poll by nearly around 700 crores plus. You had, in fact, the margins that did quite well as well, more or less in line, and the profit number came in higher than estimated. The finance cost, by the way, on a sequential basis, was down by nearly around 9% odd. Domestic business, let's focus on that first. We already had the sales volumes numbers with us. The EBITDA number came in at around 1,600 crores. Now that looked very, very good, in fact, in comparison to what the street was working with. And if you calculate the EBITDA per ton, came in at around 13,800 rupees. That's higher than what most expected on the street. The Oman business as well did well. Out there, in fact, they're clocking now a run rate of around $68 million. So that's very good because they're looking at listing that entity and maybe, in fact, selling part stake of it as well. Let's get the next plate up. I think we should get the next plate up for you on the screen. Correct. And finally, the power business as well. We were expecting around 320 crores approximately. That's precisely what it came in at, actually, 314 crores odd. Pulling up a couple of brokerages then, you had Axis Cap. They have a buy rating on the stock, target price of around 377 rupees per share. IDFC, they reiterate the outperform rating on the stock with a target price of around 343 rupees per share. They are factoring in a 38% growth in the standalone EBITDA number. And in fact, they have, expecting that EBITDA number to jump up to around 7,500 crores. Stock should open up in the green.
All right, Nigel, that's as far as JSPL is concerned. Let's stay with the metals pack itself. Hindalco will be in focus ahead of its numbers. This week, the third time we're talking about Hindalco, and like you said yesterday, perhaps this is the least important?
Yeah, that's right, Manglam. You've got it bang on. Eh? I think I'm doing a good job out there. Okay, all right. Hindalco, if you look at it now, Manglam, and that's the reason why if you pull up a week-to-day chart, I think the stock has already gained considerably because we already had positive surprise coming in from who they are buying. Now, they are buying LRS. Those numbers look good. In fact, if you look at it, they also, Novelis did very, very well. So bulk of their earnings now come in from Novelis. Novelis accounts for more than 60% of its EBITDA number. Today, we are focusing on the standalone numbers. So these are standalone numbers really that we're looking at. Top line, we're expecting a growth of close to around 10% odd. Margins, we're expecting it to be stable at around 11.5 to around 12% odd. And profit number, we're expecting it to jump up by more than 40%. You'll say, how come it's expected to jump up by such a large extent? That's because in the first quarter of last year, they had made a provision, and that was an exceptional hit of around 100 crores odd. So keep that in mind. It's coming on a bit of a dented base. We know metal prices have been up. Both aluminium, copper prices have moved up. So the top line growth basically will be led by higher LME prices and a weaker rupee. Bodes well for some of these base metals. However, lower copper volumes will impact that top line growth. Focusing on the aluminium business first, we're working with a sales volumes number of around 310,000 approximately. That will be a growth of around 5% on a year-on-year basis. And in terms of an EBITDA number, Kotak is very aggressive. They're expecting more than 1,200 crores. But otherwise, the range is roughly around 950 to around 1,050 odd. So we're working with a number of around 1,000 crores. What really will restrict the gains in terms of a margin expansion out there? They hedge some part of their quantity. So that doesn't help them because, in fact, at times you get a lower realization out there. So that could be one possibility that plays out. Secondly, we know coal prices have moved up. So that's what could impact them. In fact, petrol prices as well have gone up. So crude derivatives on the whole will hurt them. And remember, to make aluminium, you have to buy alumina. From their alumina, they're sourcing it from their own subsidiary. That is from Utkal Alumina. So because of transfer pricing, that's what will dent the profitability a bit. And copper supply as well has been lower because they undertook a shutdown in this past quarter. The Utkal Alumina business, though, after seeing strong numbers from Nalco, I won't be surprised if they beat that 400 crores odd that's come up for you on the screen. Some part of the street is working with 450 to around 500 crores odd. Copper business, they'll get, yes, partial benefit because Vedanta's Tuticorin smelter did shut down. But what doesn't help them is that for 22 days, that plant was shut. The profitability though, as I said, will come off a low base, but it could be dented partially because maybe higher depreciation cost as well as lower other income. Midday, or hopefully 2 o'clock, I think we should expect these numbers.
Okay, Nigel, thank you so much for bringing us those updates from the metal space. But let's shift focus to the pharma space now, because Aurobindo Pharma posted a mixed set of earnings this time. The revenue was up around 15%, but the margins were weak. Ekta joins in with all the highlights. Ekta, good morning. Over to you.
Hi, thanks for that. Well, like you mentioned, yes, it was a mixed quarter for Aurobindo. So the revenue growth was around 15-odd%. The street was working with around 11-odd%. What stood out within the geographies had to be the US business, which grew both on a year-on-year as well as on a sequential basis for Aurobindo this time. So that should bode well. The other markets were strong as well, except for the antiretroviral segment, which has declined for all companies. So that was, down on a year-on-year basis, but up on a sequential basis. That seemed to have pulled down the revenue a little bit. In terms of the margins, yes, it was a bit of a disappointment which actually came in. Not a bit, it was quite a significant disappointment. Even on an adjusted basis, the margins were at 18% versus 21% adjusted for Forex, and that seemed to have seeped down into the profitability for Aurobindo this time. The conference call is at 8:30 a.m. this morning, so we'll obviously wait by for commentary, because that I think would be more pertinent in terms of the stock movement.
All right, Ekta, thanks a lot for that. That's as far as Aurobindo is concerned, but you'll be also watching out for Sun Pharma. Overnight, Taro came out with their numbers.
Yes, absolutely. Well, Taro will be in focus, or rather Sun Pharma, because its US arm Taro came out with numbers. The revenue decline was around 4-odd% on a year-on-year basis, and margins have declined to around 40-odd% versus 48-odd%. Profit, however, was higher. Now, if you just look at the numbers as a whole, it looks subdued. But if you compare it to the trend that we've seen in the past couple of quarters, then it looks better than what they've probably indicated in the past couple of quarters. So based on that estimate, Taro is probably a little or relatively better than what is reported. So overall, yes, the pressure continues. There's pricing pressure challenges which continue, but and the management has spoken about that. But the volume growth was around 11% in this quarter gone by. So that should probably be a little bit of an incremental positive. So overall, subdued for Taro, but better than what they've reported before.
Okay, subdued for Taro, mixed for Aurobindo Pharma. But what are expectations from Glenmark today, Ekta?
Well, for Glenmark, in terms of the numbers, what we are expecting would be, the India business bouncing back. And the reason for the India business bouncing back would obviously be on account of the GST revenues, and the normalization of the quarter. And remember that Glenmark has a very strong India franchise. They have very strong dermatological products, and they are expected to continue in terms of a growth momentum, and combine that with GST-led normalization on a year-on-year basis. So that's expected to drive growth for Glenmark. Separately, for the US business, what has actually hampered Glenmark is that they've been very, very clear about the fact that pricing pressure is likely to continue for the next coming quarters as well. So that would be a key trend which will probably make the overall set quite subdued, but India should probably mitigate risk to a certain extent. In terms of commentary, what we will be watching out for will be finance costs and what exactly the new chemical or the new biological entity pipeline will look like.
Let's take a quick look at what the Asian markets are doing, because remember when we started off the show, Nikkei was down about 0.5%, Kospi was down about 1%, but now we are seeing a tad bit of recovery when it comes to the Kospi. The Shanghai also trading in the green, up around 0.25%. Hang Seng is down about 50 points, but the Kospi is now down around 0.7% now. Remember when we started off the show, it was down about over 1%. The weakness continues when it comes to straits, because that one is still down 0.25%, 1.25%. But if you look at the early rates coming in from SGX Nifty, they were pretty much flattish. So if you look at the SGX Nifty, that one is still resilient, just down about 1 point, starting at that 11,487 mark. But let's talk about the world of commodities now, because there's a lot of action happening there. And Manisha Gupta, as always, brings us the update. Manisha, good morning. Over to you.
Thank you so much. Well, yes, there is plenty action happening in the global equity commodity markets, and because the global cues are such, starting with the crude oil prices, and while we did see we are closing this week on a negative note, The important thing to note is that China, after making a lot of noise, has dropped crude oil from its tariff list. Well, that is something that the markets really were watching quite closely. Apart from that, it is the escalating U.S. and China trade dispute that does warns on, the demand from the global markets going down. That is weighing onto the prices. And then Iraq has cut the official selling price for the month of September for the Asian consumers, and that eases the tension a bit. Apart from that, there are reports suggesting that the U.S. gasoline supplies are now seen sufficient and the refinery runs have been on the higher side. So it's not just crude supplies which are on the higher side, but the energy products, the supplies are also firm. And that's yet another thing that's bringing the prices down. So some more pressure is what you can expect in case of crude oil prices for the very near term. What is doing well, though, has been the metal space, a third straight day of gains today, while, of course, the global trade tensions are weighing onto the market. But it is the U.S. dollar rally which has paused, is giving some support. China moving on with stimulus to boost liquidity and demand is something that also has worked with the metals. So most of the metals are closing this week in the positive.
All right, Manisha, thanks a lot for that. The big positive for India, of course, is lower crude. But let's take a look at some cues coming in from the F&O space as well. From the flows perspective, we have been pointing this out ad nauseum. Now it's day 4 in a row that the FIIs, they've been buying in cash markets. So 1,500 crore worth purchase in the cash market. Yesterday, we saw some selling in the index futures at the top. So that is something we will watch out for. So in index futures, over the last 2 trading sessions, the FIIs bought. And yesterday, we saw a sell of close to around 282 crores. However, the FIIs more than made up for that by buying in the stock futures. The important data point, though, is to watch out for the put-call ratio. It is at a higher level at close to around 1.8. This compares with 1.75 odd there it was in the previous trading session. And we saw a lot of writing at the 11,400 put, 11,500 put as well. The mark to watch out for will be 11,500 primarily because the 11,500 call has the maximum open interest. So expectations of a bit of a tug of war between the bulls and bears for that mark. Important stocks to watch out for because the FIIs bought about 600 crores in stock futures. I'll be watching out for Jet Airways. We have been speaking about this, backed by some news, and the stock is out of F&O ban. Add to that, we saw some fresh longs built up on the stocks that moved yesterday, the likes of Axis Bank, ICICI Bank, even Page Industries, which moved by about 7% yesterday. Interesting to see whether there is follow-on or not. A lot of short positions added on the likes of Engineers India as well as Cummins. So it'll be very interesting to see whether these shorts get followed through or not, or is there a case for short covering.
Okay, Mangalam, thank you so much for that. But let's move on and go on to our bullseye corner now because our contestants this week, Ruchit Jain, Gaurav Ratnaparki and Manish Sharma are battling it out for the strongest portfolio. Let's hear their picks for the last day of the week.
My first pick today is a buy call in Capital First with stop loss below 561 for target around 605. My second pick is a buy call in IDFC Limited with stop below 47.50 for target around 54.60. My third pick is a buy call in Kaveri Seeds with stop loss below 603 for target around 665. And my last call is a buy call in Manappuram Finance with stop loss below 110 for target around 117.
I have a buy call on Biocon, stop loss 560 and target on the upside at 593. Next one is also a buy call, this one on Oriental Bank, stop loss 79.30 and target at 84.70. The third one is on the short side, and that is Shriram Transport Finance Futures, stop loss 1455 and target placed at 1365. The last one is also on the short side, and that is NIIT Tech Futures, stop loss 1302 and target on the downside at 1221.
My first call is buy call in McDowell at the rate 610, place a stop loss at 600 and look for the target of around 630. My next call is buy call in LIC Housing Finance at the rate 559, place a stop below 545 and look for the target of around 520. My next call is buy call in L&T Finance at the rate 180, place a stop loss at 176 and look for the target of around 190. My last call is sell call in Titan at the rate 920, place a stop loss at 940 and look for the target of around 870.